Here is something most people don't understand about the flow of capital. If you've been buying USD since the beginning of this year, you could have made some profits. Let's say you've been buying USD from January, you buy USD in February, in March, you also buy USD. You could have made some profits. Let me take you back. Before the tension in the Middle East um, escalated, I made a projection on my Telegram channel on GBP, USD, on USD PS. So basically, it's all based on fundamentals bias based on the year cycle. So basically, Q1 is expected to be risk off. What I mean by risk off is that I expect um, USD, I expect safe assets to be strong, and that is what has been happening so far with the USD pairs. Currently, if you look at New Zealand USD, Euro USD, GBP USD, and a lot of USD pairs generally, you will see that USD has been strong. Now let's consider the fundamental aspects. Expectedly, JPY is expected to be strong in Q1. CHF is also expected to be strong, and USD. But considering the fundamental aspects, JPY has been quite weak. So you might consider buying the USD in Q1 because USD is relatively strong and is a safe asset. Is one of the strongest of all the safe assets. And considering the geopolitical tension in the Middle East between US, Israel, and Iran, potentially, if you are buying oil, generally you're gonna expose indirectly to USD, which means if you are buying oil, you are definitely buying the dollars, and this will create demand for dollar. And let's say things get bad, the global GDP slowing down, the markets are risk off. So this will strengthen the safe assets. JPY, CHF, USD will get strong. Demand for dollar will increase because the global economy is being reallocated. There is change in flow of capital into safe assets. So in the period of geopolitical tension like this, investors will prefer saving their money into a safe asset, so which will drive demand for safe assets. Now let's say you've been buying dollar all along, you could have at least made some profits. So you as a trader, you should leverage on this to form a bias, not trading against the flow of capital. And let's not get carried away, because when the whole thing normalize, and when the conflict normalize and the global economy return back to normal, there could also be a shift in risk on sentiment because expectedly Q2 is expected to be risk on. We expect the equities to also rally. So don't get carried away. So as you are paying attention to the geopolitical risk, you are also paying attention to the shift to the normal global economy so that you don't get caught.